Hello traders, and welcome to Trading the Trend. I am Dennis and this is my midweek report. Today is Wednesday, December 9th, and we had quite the day today. We're looking at the S&P 500 right now, and we were up early, and then things went south, and then before the end of the day we started to come back a bit. So if you ignored this upper shadow, 3 days in a row we've had these down candles with a long lower shadow. So that's telling me that there's still, as the market's selling off, there are buyers that are stepping in to buy to keep this thing from really heading south. So as long as that continues to happen, there's still a ray of hope that this thing turns around and we get that Santa Claus rally that we usually see this time of year. I would say this would be an important level, because if we get below that, that would constitute a lower low to go with this lower high. That would be a new short-term trend. So let's hope that we can stay above this area and that the bulls can get in here and give us our Santa rally. Now, if you look over here, currencies were quite active today. New Zealand had a nice bounce. I haven't seen the results, but I'm guessing this had something to do with their central bank rate decision. U.S. dollar really took it hard today. That was a little bit of a surprise, but it may just be setting up for something better down the road. So let's take a look. First, we'll look at my strong week ranking. I just complied this. Hasn't changed a whole lot from yesterday. The Canadian dollar has just gotten a lot weaker, though. That's one we're at to watch, because there's a lot of reports that oil prices are going to continue to drop, and that is bad for the Canadian dollar. So, if you want to play the oil industry, if you want to go short oil, then you want to be long U.S. dollar, Canadian dollar. So let's move on to some currency pairs. And here we have the euro US dollar, and of course we had that big up move, and then we pulled back and right down to this red line. This is a red line that I had drawn back here when we had these two lows, and I kept that line up because it looked like it was important. And sure enough, once we had that big one-day spike up, we pulled right back into it. We even tagged the 34-day moving average, and we have shot right back up. But now look where we're at. We're right at the 200-day moving average, and that looks to be offering some resistance. So we'll watch that carefully. If it can get on top of that, then it certainly can go higher. If we get some kind of a reversal candle from here, then it might be time to go short euro again. But too early to make that call right now. Let's take a look at the Aussie US dollar. That one didn't move a whole lot today. It did get all the way down. It's been on a 3-day losing streak, and today it's finally rebounded. It went all the way down to the 34-day moving average. Remember, that is the 200-day moving average on the 4-hour chart. It tagged it and bounced, so just as it tagged it and bounced here, tagged it and bounced here. So that's been a line of support. So it wouldn't be a bad thing to take a position here if you're trading this to the upside. It's still a counter trend trade. Long term is down on this, so I'm still looking for the point where we can get back on this to the short side. Now let's take a look at the Euro Aussie, and this is another interesting chart. As you can see, we had that big up move, and then we had the 1-day pullback, and we stopped right at the 200 moving average. And then we've had a 3-day shoot up, and we've stopped right at this red line that I painted at the 152.50 line. That was off of this reversal right here. That has been showing to be both support and resistance. And here it is again. It's offering us resistance as price is trying to move up. So kind of like the Euro US dollar, the Euro Aussie is hitting a point of resistance. And seeing how it's hit a point of resistance at both at two different currencies at the same time, that could be significant. So we'll have to watch this. I mean, if you're going to go short here, it could pay off for you, but it's a coin toss right now where this thing goes. I mean, you could go short here, put a stop just above this high here. There'd be a low risk entry. If it pays off, great. If not, you wouldn't be out much, but that's one thing you could look at. And the one trade that I am still in that is still hanging in there for me is this U.S. Canadian dollar. This thing has been in if we go out further, this has been in a very long-term uptrend. This is more or less the decline in the price of oil and gasoline. And as you can see, excuse me, as you can see, we've hit a new high just a couple days ago, and today we just pulled back a little. This is just the early few minutes of the new trading day, but pull back to 135, maybe even to this high right here would be pretty normal, and then I would be expecting to see this thing shoot back up some more. Like I said earlier, I'm seeing forecasts for much lower oil prices. If those come true, then this thing has a long ways to run to the upside. So that's what I got for you today, and I will catch you all this weekend. Have a good day.